Breaking news, Axios now reporting the Treasury Department is planning to announce as soon as today new economic measures against Venezuela's President Nicolas Maduro. It would be a move to try and use economic and diplomatic pressure to force a regime change in Venezuela to adhere to the voice of the people who just voted there. Now, according to the report, the White House is hoping if depriving Maduro of cash, their military will have no reason to remain loyal to him. Again, the announcement could come as soon as this afternoon. Meanwhile, the market is still under pressure after getting out of the gates a little bit rough here this morning. You had NVIDIA, which had lower guidance, and that's taking a lot of tech names down with it. And, of course, Caterpillar, which had missed on both tops and bottom lines and gave pretty just disappointing guidance. Now, we've got hundreds of companies set to report, and the catalysts, there are a lot of potential catalysts that could turn things around. This is going to be a long week, and an hour to go. A lot can change here as well. So let's bring back first, let's bring in Heritage Capital President Paul Schatz and bring back Larry Shover. Paul, you know, the market, though, I got to tell you, I'm impressed, to be quite honest with you, with the session so far. The Dow's off 230 points. It was off a lot more than this, and I think it could have been off even more.
Well, sure, Charles, we came so far so fast from that Christmas low, and it certainly seems like for the past week, that initial thrust rally, those amazing breadth numbers off the bottom, we started to moderate. I think we're in this nice little pause period, perhaps a mild pullback. But look, semiconductors, this is extreme action. Banks are in phenomenal shape price-wise. And even, look, high-yield bonds, the credit market came roaring back to life. This is not what you normally see of what I've heard out there. We're in the early stages of a bear market. You wouldn't see this kind of behavior. If things were so bad, you'd see staples and utilities rallying more than everything else. But you've got risk-on assets doing fairly well. Mark came very far. Now, today's action, certainly, if you're a bear, you could have made a lot of noise. We could have had it down 500-600 point days so far, and we're not there yet.
You know, Larry, so far intraday, material names, Martin Marietta, Vulcan Materials look pretty good. The airlines act phenomenal. Alaska Air, American Air, Delta, of course, they had great numbers last week. On the consumer discretionary side, Carnival Cruise Lines, bookings, eBay, which is a name that reports in the next 24 hours, Estee Lauder. So there are pockets of strength out there. What's the message of this market, and how do you think it will close today?
Yeah, that's a great question, because you think of Procter & Gamble, Texas Instruments especially, Lam Research. I mean, those are two fragile companies there that with the chip makers, the semi-industry. All that to say, I feel like we're back to the beginning of January 14th, like when Citigroup came out with, you know, they beat estimates and everybody raised their confidence level, raised estimates for earnings per share for 2019. I think that's what's going on right now. It's very finicky. And believe it or not, we ended up with a really decent week last week. So, yeah, Caterpillar rolled over a little bit. The numbers are definitely not as bad as people think they are. But all that to say, I think people just are trying to get a better handle on guidance and what that, earnings per share number is going to be. Because there's a wide variance between some people at $168 per share to others like me who are closer to $175 a share. You know,
of course, with Caterpillar, it does reinforce one thing, that the U.S. doing better than the rest of the world. So, Paul, where does that put us with respect to this market? Because we've made this huge rebound, and now we're in sort of this area with pretty thick resistance between now and the next major breakout. What's the catalyst that could potentially get us there?
So first, this week, what do you have? You've got an enormous slew of earnings highlighted by Facebook and Apple. Both have been unloved for 6 to 8 months. I wouldn't be surprised if Apple comes in a little better than their lowered guidance. And also, I think Facebook, I think the stock probably, unless they announce yet another crisis, probably could get a bounce after earnings. Look, you got earnings, and the Feds can be out of the way. And frankly, Charles, again, we've had this huge run. It wouldn't be so bad to have a little bit of pause that refreshes, kind of broaden out the pullback, and then let things gather themselves for another push higher, even if it's not until Q2. I think we're going to new highs Q2, probably Q3, but I definitely think this year is going to be a big surprise to the upside for the bulls.
Gentlemen, Paul, Larry, thank you both very much. I've got to break away from you for a moment.